Hello investors, and this is the Market Weekly Update by FISG.com. I am Ton Kitty. Let's start with the beginning of what is going to happen this week. Certainly, the market continues to focus on the interest rate policy of the US Federal Reserve after we have passed the presidential election in America. From now on, interest rates will be considered a key factor in analyzing and determining the economic situation and asset prices. Starting with the Fed Watch. The market is predicting that the US Federal Reserve will likely reduce the interest rate once again in December from 4.5% down to 4.25%. In the next part, the Fed's dot plot forecasts. In the medium to long term, the US Federal Reserve plans to reduce the interest rate to around 3%. Currently at 4.5%, it can still be reduced by another 1.25% or 1.5%. This time, when the interest rate spread increases, comparing countries such as the United States with Japan, or the United States with Asia, or the United States with Europe, a significant difference in interest rates often leads to a situation similar to recession or economic contraction, and may lead to a potential economic crisis in the future. Nonetheless, this is a forecast. All investors should exercise discretion in their investments, as this is just one opinion. Let's move on to the asset price update, starting with gold, or XAU-USD. The price of gold has sharply decreased over the past 2 weeks, now down more than $250 per troy ounce. Currently, the price of gold remains around $2,550 per troy ounce after reaching a peak of $2,885 per troy ounce, which was in line with our predictions. We analyzed that the price of gold over the past 2 weeks should have a support level that should not fall below around 2,653. However, this support level has now been broken. The next key support level we are expecting for gold to rebound or adjust downward is between $2,500 and $2,550. If the price of gold continues to fall below this level, it indicates that the direction of gold prices will be downward in the medium to long term. Now, anyone interested in investing in gold or speculating on gold in an upward trend or a buy position should closely monitor this support level. In the next part regarding the US dollar, the US dollar has risen to test the resistance level we have observed, around 106.4 to 106.5. Now we expect the direction of the dollar to be much clearer, likely remaining in a sideways trend. Moving forward, the dollar is expected to decrease in value in the short term, with the trading range still being 106.5 to 96.5. In the next asset segment, the price of oil remains stable, so we will stick to our original strategy of accumulation. We believe that the price of oil has the potential to rise in the medium to long term, with key support at around $76 per barrel and resistance above at $100 to $120 per barrel. In the next segment, those investing in the American stock market or trading the Nasdaq index may need to be cautious. We first observed that after the American stock market went through the COVID-19 period, the index prices have adjusted. Similarly, the index has now recovered to levels comparable to those during the Ukraine and Russia war. Therefore, whether it is Nasdaq, S&P 500, or Dow Jones, the American stock market is quite in a zone called high value, or starting to exceed its fundamental value. Therefore, in the short to medium term, we believe that the American stock market may experience a significant correction. Investors speculating in the American stock market should please tighten their belts and be very cautious. From the chart, we have already made predictions. We wish everyone good luck with their investments in 2025 and late 2024. This has been the Market Update with FISG.com by Kitty Sawat. Goodbye.